Hello, I'm Warren Tapp from Tapp Advisory. Are you a director of your own company? A lot of businesses I deal with, in fact, are companies because their accountant told them to set it up that way. That means you're a director of a proprietary limited company. And I think it's important you understand what's involved being a director, not just a business owner. Firstly, I'd like to suggest you hold a board meeting once a month. You, and if you have other directors, perhaps family members or other partners, sit around an office table or a kitchen table and have a board meeting. Not operational management meeting, but talk about the big picture issues about the business, such as strategy for growth, about risk management, and all of those sorts of issues. Have a look at the financials for the previous month to see everything's okay from that point of view. So do have a directors meeting rather than a management meeting once a month. You'll find it very useful. It's important you understand your responsibilities, and if you want some advice, get in touch with me. More than happy to explain what's involved being a director of your own company. Often your accountant won't explain that to you, but you do have legal responsibilities, and if you're not careful, they can cause you a big problem. For example, did you know that the directors of the company are personally liable for the debts of the company if the company can't pay them? So they're the things you need to know. By all means, get in touch with me at tappadvisory.com.au. More than happy to give you advice on how to be a company director. It's important to pay yourself dividends. A company makes a profit every year, your business, pay it out as dividends to yourself, fully franked dividends over and above the salary you might pay yourself working in the business. And so don't just exist on the salary, otherwise you just bought yourself a job, but making the profit for you to take out as company dividends once a year, and you can pay it off over 12 months, so there's no rush in terms of cash flow. Have an exit plan. If you're looking eventually to want to get out of the business, have a plan to do so properly. They reckon 91% of business owners are relying on the sale of their business eventually to fund their retirement, but in fact they find it's not always worth what they thought. So have an exit plan. Again, be in touch with me. More than happy to help you work out a plan and get a valuation done on the value of your business. Whether you're going to leave it to your children or give it to them or sell it to some outsider as a business, have an exit plan. Here's a few tips for you. If you're a director of a company that owns your business, you have other responsibilities, get in touch with me. More than happy to give you advice. You'll find our contact details, of course, on tappadvisory.com.au. Good luck.